Photo ranker. I could talk about photo ranker as well. I've heard their pitch about 50 times, so I should be able to talk about them. Here we are. Brian, thank you for that wonderful introduction. It's been a pleasure to work with you, and it's a pleasure to be here today to talk about Contigo Financial. I am excited to be able to tell you about what we're doing, to tell you about Contigo, and to tell you about the team that we've built, who is passionate about this industry and excited to move forward. Now, all those people that Brian was alluding to that go to payday lenders, he wasn't talking about most of you in the room. He was talking about the 61% of Americans that live paycheck to paycheck. He was talking about those Americans who struggle every day to put food on the table for their kids. He was talking about the 1 in 4 who last year turned to a predatory lender, borrowing over $74 billion. This sight is all too common in the United States, and especially in our state of Tennessee. There are now more payday lenders than there are McDonald's and Starbucks combined. That's over 30,000 locations. And these lenders are charging, in our state, 380% interest and demanding that you pay their money back in 2 weeks. Contigo Financial and our team is going to disrupt this market. Contigo Financial is a web-based lender. We partner with employers to provide these loans for their employees in a responsible and affordable manner. Now, to put it into perspective, we really have to look at what a 380% interest rate and what that impact has on a small dollar loan. When you look at Contigo's average APR of 36%, our customers are typically paying about $15 a month. When they're going down the street on Charlotte Pike, they're paying on average $150. Payday lending is modern day usury. This has to stop. Payday lending has already been banned in over 16 states in our country. And in 2009, the FDIC came out with a set of guidelines for states to use as a template for us to follow. With these guidelines in place, we moved and we decided to build this company. Why? Because we believe that you can be responsible and still make money to impact more people. Our first offering is the Contigo Work Loan. This loan has those terms in them. Our average APR is 36%. Customers are allowed to borrow up to $2,500 and up to 3 to 9 month terms. By doing this, it allows us to offer our candidates and our customers these key features. One, first and foremost, it allows us to partner with their employers to make their payments automatically through payroll deduction. By doing so, we collect those payments and report everything to the credit bureaus to help our consumers build their own credit history. And lastly, it allows us to give them free basic financial education. In order to get one of our loans, it is very simple. As long as you are employed, you're at least 18 years old, and you have been at your company for at least 6 months. You can access these loans regardless of your credit history or lack thereof. So we went out and had surveys and talked to customers and employers, and we said, what does our average customer look like? And what we found was that first and foremost, our customers are employed. They own homes, and the majority of them have at least 2 children at home. So how do we do this, and how are we able to come down from 380% to 36%? We do this by partnering with companies like Brian's, because he understands the need from his employees. And we follow an AFLAC sales model. Contigo Financial partners with companies to offer their employees affordable and responsible loan products. For the employer, it's an easy decision. 3 key things. 1, there's no direct cost. We take all financial risk and we loan the loans. It's easy to implement. Our payroll deduction process is the same that you're already doing within your companies. And lastly, we give you a tool that you could use to attract and retain your employees, free of cost. For the employee, once we're signed up with the employer, it's a simple process, the way it should be. You can come and apply to our loan products through any one of our access points, be it your home computer, a smartphone, or give us a call on our 1-800 number. We process that loan in minutes and give you a response. Within 24 hours, you have your funds deposited into your bank account. All of this with the ease of automatic, small, fixed payments that are made for you through payroll deduction. On the back end, we're not a tech firm. We are partnered with one of the leading transaction management softwares in the industry. Through our partnership with Tran.com, who is a SaaS platform and is PCI compliant, it allows us to move rapidly throughout the country. They follow all the legal laws and loopholes and hurdles that you have to go through in our country to allow us to do that. They not only work in most of the states here in the US, but also in Canada and the UK. Now, Tran.com allows us to expand rapidly, but we are focused on the state of Tennessee first. Why? Because this is where we have our deepest relationships. Also, because of what Brian alluded to, this state and this market is prime for disruption. It ranks as one of the top 5 states in our country with the number of payday lending shops and a large consumer base who is in need of affordable loan products. As we look at our relationships, we've been able to build over 45 companies and potential partners that we have. We have personal and professional relationships with all of these companies, and what we've done is we've reached out to them, and over half a dozen have told us, hey, we want to work with you. So we've chosen 6 of them to be our pilot partners. What this does is allows us to understand where these companies are coming and why they want to partner with Contigo. Most of them fall within 2 different buckets. One is a bucket of an outsourcing partner, like Aid and Assist. They already provide these loans to their employees, and they're looking for Contigo to come in and do that for them. On the other side is Simplex Healthcare, who has a robust human capital team, and they understand the need of their employees. They're looking for us to come in and offer the Contigo loan as an added benefit to their suite of benefits. Now, moving forward, we are going to continue direct sales to employers. We don't like to say it's a sale because it really is a partnership. It's at no cost to them, but we will continue that effort. But we know that to truly expand, not only in the state of Tennessee, but also in the rest of the country, we will partner with payroll providers and PEO providers like Innova Payroll in town. We will also continue our conversations with healthcare brokers like Bernard Health. There are many lenders out there. We really focus on those lenders who follow a similar model to us and work with employers. The three competitors that we see are Emerge, Symbius, and FlexWage. All 3 of them follow a similar model, but they charge the employer a $4 to $7 per employee per month fee for their services of financial education. Contigo Financial is a lender, first and foremost. We are a lender who provides these services at no cost to an employer. Our cost and revenue drivers. As we look as a lender, we have 3 main cost drivers. First and foremost is our loan loss provision. That is a provision and an allowance that we set aside for bad loans. Then it's our legal costs and our marketing and sales. But our revenue drivers are driven by that number of employers that we can really work with. The achievable APR and the loan volume. How many loans can we place? As we looked at building our financial projections, these are the key assumptions that we've made. Our average loan will be $1,000 with a 36% APR and a 6-month term. We have set our own loan loss provision at 8%. That is nearly double what other lenders have in our industry. With these key assumptions in mind, we have projected out 5 years. And what we have seen is a projected growth that starts at the beginning of year 1 with a negative 16% to, at the end of year 5, our net operating margin is over 50%. With this trajectory, we expect to break even in month 17 with about 16,000 loans outstanding. We expect to have high growth in the first 3 years. But in our high-level financials, I really want you to focus on this efficiency ratio. This is a ratio that most financial institutions use to measure their productivity. How productive are they? We're able to lower our costs by growing our revenue significantly. And at 28% in year 3, we're already half that of a typical lender in our industry. We are here today to ask for $1 million in equity. This will allow us to not only fulfill our operating needs, but also become cash flow positive. I am excited about the team and co-founders that we've built. These men have been with me through thick and thin and bring a wealth of banking, consumer finance, and finance in the same sector. Myself, like Brian said, my experience is microfinance and business development. Carlos Campos brings over 8 years of experience in consumer credit. Ian Cotton comes to us with experience in community banking sales and retail operations management. And Olu Falana brings over a decade of commercial banking and treasury management experience. We have complemented our team with a notable group of advisors who have been helping us and leading the effort as we build Contigo into the premier web-based lender. We are excited about the opportunity that we have to make a true impact in the lives of millions of Americans and to bring to them freedom in their financial needs. We are here today to ask you to join us in our journey as we disrupt the $74 billion industry. Thank you.